So it's the first week of December, and the first thing that markets are looking out for is purchasing managers' indices for the UK, the Eurozone and the United States. Now these indices are good bellwethers for the health of the economy in general, and today we'll see manufacturing PMIs come out. Eurozone manufacturing PMI has already been released, and it showed a level of 50.1, which really is barely showing growth and optimism in the manufacturing sector in Europe. Now, the other thing that's happening in markets at the moment is a major rout in crude oil and other commodities. This has been triggered really by OPEC last week failing to cut production in order to support crude oil prices. And we've seen Brent crude oil fall below $70, which is an important psychological level, and there's been knock-on effects into other commodities. Now, the fall in commodity prices increase the risk of disinflation across the global economy, and one place that the disinflation risk is really quite a major concern is the Eurozone. Last week's Eurozone inflation figures showed that inflation in the Eurozone was failing to improve, and Mario Draghi of the European Central Bank identified the current low level of inflation as unacceptable and said that the European Central Bank needs to act to increase inflation without delay. Well, the European Central Bank has its latest policy meeting and a press conference this Thursday, and expectations are building that the ECB will announce some additional easing action. They really have two core options. The big bazooka option is purchases of sovereign assets, so government bonds essentially, like what the Fed in the United States has done or like what the Bank of Japan has done. Now this option may run into some political and legal obstacles, especially in Germany, so what we might see from the Eurozone is the inclusion of corporate bonds in its asset purchase program. Now, expanding the monetary base in the Eurozone, which is what the European Central Bank might do, will weaken the euro. And between that and the fact that we have US non-farm payrolls on Friday, we could see euro-dollar, which is arguably the most important currency cross in the world, test some very important psychological levels such as 124 or 123.50. Now, US non-farm payrolls are due out on Friday. A lot of the growth that we've seen over the last few months, especially last month in US jobs figures, has been in the retail sector. So Black Friday is now done and dusted, it's over. So potentially we could see a slowdown in job creation in the retail sector, which could slow the overall jobs figure. However, between the ECB meeting, non-farm payrolls and volatility in crude oil markets, we will certainly see a lot of action on FX majors this week.